job. So thanks for joining. This is the final event of the People Track, at least for Buffalo Startup Week 2021. So this is a great, I think, summary in the end of the other presentations that have occurred this week, and kind of brings it all together, and certainly essential things we're going to talk about in this presentation. If you go back and watch or listen to some of the other ones, it dives perhaps a little bit deeper into some of the things listed here. But this is a great takeaway, especially from a compliance standpoint. We'll summarize what the really essential things are, and then also from a strategic standpoint. So those will be the two focuses of this presentation. So my name is Emily Martin. I'm the owner and founder of Ally HR Partners. So my business basically specializes in helping small businesses, which could include startups, in meeting their HR and people needs. So again, it ranges along the spectrum of compliance to more strategic people strategy and people needs, coaching and consulting. God knows there's enough of it out there now with the talent war and compliance changes occurring. So I work with businesses of a lot of different sizes and across basically all industries, hospitality to digital marketing agencies to medical offices. So I've pretty much seen it all, and nothing really surprises me at this point. So about 12 years of experience, I think, has made me a pretty good expert at this point. All right, so the first category of essentials that we're going to talk about today has to do with compliance. So really, if you don't care about anything else in the HR space, a lot of business people find it to be fluff, which is a mistake. But if you're going to consider it that, you at least need to worry about compliance in this day and age, because both at a federal level and then individual state level, kind of, depending on what state you're in, the laws are ever changing, and the government's becoming more and more aggressive and going after businesses, even proactively, for non-compliance and finding them and kind of demanding that they pay employees back pay. So we're going to start here with compliance. So a quick education here, but who regulates? So just so you're aware, employment law is regulated at both the federal and the state level. Most of what we're going to talk about today is federal and or New York State, because that's just the state that we're within. New York is probably the second most litigious state from an employment standpoint, and also from a law standpoint when it comes to everything, but including employment law. California is probably a little bit more of a nightmare area to have a business, so avoid that if you can. But at the federal level, there is the federal DOL. There's the National Labor Relations Board, which governs a lot of protected activity for unionization. The Wage and Hour Division, which goes after businesses for wage and hour compliance and basically employee wage payment concerns. Then you have the Equal Opportunity Employment Commission, which regulates a lot of discriminatory protected class discrimination type lawsuits and compliance. And then New York State and many states have usually their own DOL or Division of Human Rights or something to protect those discrimination laws. Some states do not. For example, Florida does actually not have its own DOL, but New York definitely has all of that. And then of course the IRS comes into play, because there's all sorts of taxes that you need to pay the business when it comes to having employees. So a quick lesson on that. And then just as a caveat here, all businesses are subject to federal employment laws and state employment laws. Whenever the state law is more generous, that law supersedes any federal law. And then there are other categories that you could belong to as a business that help regulate your employment compliance. For example, if you're a federal contractor, that list of additional compliance needs is growing. If you're subject to prevailing wages, if you're a nonprofit, teachers, there's all sorts of little detailed eddies that you can go down with employment law. So important to have an expert in your corner on this stuff. All right, so the first thing we're going to talk about is, do you even have employees? If you don't, then a lot of these things don't apply to you. But ultimately, I would assume if you're a scaling startup, you will have employees, and perhaps even now, if you're using contractors, they technically, in the eyes of the law, could actually be employees if it was ever challenged. And this definition of contractor versus employee or joint employer, we're going to talk about after this slide. The definition of employer and employee is really broadening. So this is something, if you're using contractors now, you want to be super aware of, especially going into the next few years here with the Biden administration controlling the DOL and them really being more sympathetic to employees here. So the question is, are you using contractors who are really employees? So like I said, scrutiny is heating up at the federal level. They've been very explicit about saying that they're going to be going after this proactively with businesses. Basically, the Department of Labor and the IRS both have huge motivation to go after businesses for this because there's all sorts of taxes that come into play when you have employees, but there's also a lot more beneficial wage and hour law and practices for employees versus contractors. So things like overtime and other pay benefits that employees are subject to, but contractors are not. And it supports the unionization efforts, which is obviously something the Biden administration is supporting in the next 3 years to have employees versus contractors. So there is a lot of motivation here. It's also a hot topic in the media right now, workers' rights. We've all heard, the gig economy being the enemy of the employee. So it's a hot topic right now. So if you have contractors, you want to ask yourself some of these key questions to consider whether or not they really should be classified as employees. And you might want to consider making that change. So a lot of this, as you're reviewing these, has to do with kind of the level or the scope of control that you have as the business over what they're doing and basically how they're making money, right? So if you have an individual who's doing work for you and they aren't doing work for anybody else, they don't have their own LLC or something like that, that's a bad sign because you're their individual source of income. And it sounds like that's probably an employment situation. Again, the scope of control over the work that they do for you. Are you asking them to do a specific kind of like outcome deliverable, or do you control like individual tasks they do and how they do it each day? That's a bad sign. If that's the case, they probably should be considered an employee. How you pay them, if you're paying them on an hourly basis, the same way you would an employee versus like a flat fee for some type of deliverable each month, that's a bad sign. And you can see all these other questions here kind of indicate that. So the more entangled they get with like any staff or the control you have or offering them benefits and things like that, the more likely it is that they really should be classified as an employee, and you potentially are at risk for some penalties and fines if that were to come to fruition. And that could include back due federal tax and state income tax payments, unemployment tax, all sorts of things that you're required to have, insurances and things for employees. You could potentially owe that looking back a number of years. Also fines, and then retroactive wage and hour compliance issues. So overtime payments that you owe them or something for the past. So it really can add up. It's a really high risk area. And like I said, it's becoming more and more targeted, especially by the federal government at this point. So on that note, the employer liability risk is really increasing out there. The PRO Act is something that's out there at the federal level. It would basically make it more difficult for companies to have either freelancers or independent contractors because it narrows the scope of what that looks like and widens the scope of what an employee is. You can Google that if you want. There was just a federal ruling that came out a couple weeks ago that talked about what the government's definition of joint employer is. And again, this is just, further reinforcing that they're going to be going after this, the fact that they issued that statement. But basically the takeaway was that there's really no black and white equation for that. They're going to look at the totality of circumstances. But basically, again, if you're controlling the work someone's doing and ultimately pretty individually how they're being paid, you're probably going to be seen as the employer, which means even if you have an arrangement with a PEO who might technically employ these people, or temp agencies, staffing agencies, subcontractors, if even though those employees or those workers are on that other company's payroll, again, if they're basically within the fabric of your organization, you control their hours, you control, hiring and firing decisions. or even if you have the ability to do that, you're going to be considered a joint employer, which means any liability that comes up for that company that does employ them, whether they violate wage and hour law or some other employment law non-compliance, you're probably going to be on the hook for that also. And in this statement that came out, it was very clearly made clear that the federal government is going to proactively go after this and be pretty aggressive about it. So there's no more need for an employee or a class of employees or contractors to complain about this in order for you to get in trouble. It's possible they're going to come in and be looking for problems. So that's really disconcerting for companies. But again, just something to be aware of as you look at your worker population. All right, so if you find or want to go the less risky route in some way of having employees versus contractors, or some other kind of third-party arrangement, you definitely, of course, then need to think about starting a payroll. And there's all sorts of requirements for payroll depending on which state you're in, different taxes that you have to pay, and of course that means being registered within those systems and states, and insurances like workers' comp and state disability for certain states. So this is a pretty general checklist here of the kind of the must-have things. You should also be aware when you're budgeting for hiring staff, on top of kind of the base salary that you are going to be providing, all of these taxes and insurances kind of add up to about an additional 30% cost for those salaries. So be aware of that. Biggest takeaway here when you're when you need someone, you need to run payroll, is to get a good payroll provider. There are many terrible ones out there that do not look out for you whatsoever. They basically are like brokering the software to you. They're not, most of them, providing a great service. They don't care if you're compliant or not. They kind of put that onus on you. There are providers though that will go the extra step and consider that, or have tools that help you do that better than others. So my advice is make sure that you're not being taken advantage of there, and that you get a really good provider. So this slide is just a suggestion about what some of those are. Gusto is an awesome product. It's totally web-based. I have a startup client that uses that now for employers that are 50 employees and under. It's super easy. It's very intuitive, very user-friendly. I would suggest looking into that. Complete Payroll is a provider that's local, that's high-level service. So if you're really, really scared or something, they definitely will keep you out of trouble. And then Paylocity is a great product for smaller, but also longer-term scaling if you're going to be above 50 employees, and they're a great tech product. But make sure you consider when you're looking at payroll providers, there's a lot of HR tech besides just payroll out there, applicant tracking systems where employees apply through, electronic onboarding. There's a lot of features in these systems now that can save you a ton of administrative costs and time, and also can help you automate things from a compliance standpoint. So make sure you consider what your current needs are, but if you are planning on scaling quickly, what the capability of this tech is long-term, so that as your needs scale, the tech can scale to meet those needs. And again, I've worked with many, many payroll companies and also businesses, and helping them make these decisions. So certainly happy to provide advice here. All right, so we're going to dive a little bit more into the nuance of some wage and hour law that you definitely should know. So, I mean, we could spend probably, an entire week talking about everything you have to know, but these are the basics of what's most likely to get you in trouble. And a lot of people take this for granted initially when they open businesses, and they don't pay attention to these things until they have some sort of audit by the DOL randomly, or an employee makes a complaint or makes a claim against the company, and then they're staring down the barrel of a pretty expensive gun. And these claims can really be enough to put you out of business, to be honest. So if you do have issues in this wage and hour area, you will owe back pay, potentially up to 6 years. And then usually, at least in New York, they tack like a 25% fine on top of that. So Depending on the number of employees that involves, that could be a lot of money. This is the #1 area of claims and just random audits in the country. So if you're, again, going to be compliant in one area, how you pay your employees is probably the area to focus on. And there's reduced fines as well if you can show that if you made a mistake, you've made good faith efforts before a complaint to fix it. So if you have employees now and anything during this presentation comes to mind that you might be doing wrong, let's talk about fixing it now, because then you at least won't have to pay the fines if we go ahead and back pay those employees. So
Emily, can you go back, Emily, to the last slide again there?
Sure.
So can you give me are there some common areas that cause these claims, or are there lots of different things that give rise to claims?
Yeah, we'll cover some of them in the next few slides, but like misclassification, so paying people a salary which means making them exempt when they shouldn't be classified that way, and they must be classified, to make overtime. Also just tracking time, automatically deducting for meal period breaks when people don't take them, not accounting for every hour worked, so you don't pay overtime for hours over 40. Those are probably the biggest areas.
Okay, thank you.
Yeah. And I have a client actually who recently just, the federal DOL just came in to do a random audit, and he's very generous with paying his employees well above minimum wage. This isn't a restaurant, plus they get their tips, but he, even though that's the case, the DOL is literally just looking for stuff to fine him on or to have him back pay his employees, even though no employee would ever complain. So it's crazy out there, and it's ridiculous, honestly. And it's almost impossible on your own to know what all the rules are, because there's so many. But one of the biggest areas I see is, at least going in, one of the easiest to fix is this idea of employee statuses. So for those that aren't familiar, this is regulated at the federal level. There's basically two classifications of employees. There is exempt, so those would typically be your salaried employees. And exempt means that they are exempt from needing to be paid overtime. So federal and New York state law says you have to pay employees overtime for any hours worked over 40 in a work week. Just as a side note, that can vary by state. For example, California is over 8 in a day or 40 in a week. But exempt employees are not required to be paid overtime. Non-exempt are. So most people see these exempt and non-exempt and think, salaried, which is exempt, or hourly, which is non-exempt. But this isn't really just some arbitrary decision that you can make for ease of payroll processing, or even for preference from the employee. There are very specific requirements that need to be met in order for an employee to be classified as exempt and therefore paid a salary and not be eligible for overtime. So let's talk about that. So basically there's two parts of that test. One, the easiest one on the right here, is that they need to be paid a minimum salary wage. So in 2022, it's crazy what this number is now, but that amount is going up to almost $52,000 a year. So basically what that means is, unless you pay an employee this number, $51,480 annually, they cannot be paid a salary generally, and they cannot be ineligible for overtime. So you'd have to pay overtime. And there's a couple different categories for exempt employees or positions, but most of them are going to fall into that executive and administrative. So that's the salary threshold. Professionals, people always think that more roles can fit into that, but unless you're like a chemist or something that's very highly technical, you're not gonna, employees won't fit into that category. The second least or lesser known test, or part of this test, is the duties test. So not only do they have to meet that minimum salary threshold, they also have to meet one of these duties tests here. So basically this has to do with the level of decision-making or discretion that an employee has in their role. The executive category is for managers. So if any of your employees have staff that report to them that they have hiring and firing decisions over, or control over, they would neatly fit into that category. And then the other most common one is administrative, and that has to do with the level of independent judgment and discretion they make on matters of significance. Those are obviously all very subjective terms. There's a ton of case law out there about this, but your HR positions would typically fall into that category, or like higher level, maybe department managers, even if they don't have people that report to them. But if you are unsure about whether a position meets that duties test, even if it does meet the salary test, I recommend us reviewing it, because this is, again, if the DOL were to come in and say an employee that you've classified as exempt should not be, then potentially they would go back and look 3 to 6 years to see what overtime you owe them. And if you can't prove that you don't owe them overtime, you will be paying them overtime. So this is something to really take note of. And it's frustrating because a lot of employees, especially in the startup setting or professional setting, want to be paid a salary because there's some level of status associated with that, I think, mentally. But in general, most of the time, it's much safer to pay hourly and treat people as non-exempt.
Can I ask you a question there, Emily, on the last one there again?
Sure.
So am I understanding this correctly, that if you have a startup and I'm the founder and I hire a COO, I have to pay them 52 grand a year, or I'm breaking the law?
You don't have to. You can pay them less, but if you do, then you would need to track their hours and make sure that you're paying them overtime if they ever work over 40 hours in a work week. Yeah.
So there's no exemption for like a startup where you're given equity instead of sort of salary?
No, up to 10% of that 51,480 can be like a bonus that you pay out, and it,
Okay.
in the year. So that offers some wiggle room.
Yeah.
But no, otherwise they would need to be non-exempt. And I'll just mention this higher number, this 51,480, this is New York specific. So
yeah.
Other states do have their own. The federal level is still lower. I think the federal for executive and administrative is 35, just like that professional number that you see here. But I will say there's no doubt in my mind the federal minimum for exempt is going to get risen during this administration, because Obama was trying to do that before he left office and it didn't get approved. So that will be going on.
And if a company is incorporated in Delaware, but the employee works in an office in New York, then these guidelines apply, correct?
Correct. Yeah, it's where the employee is working. Yeah.
Yeah. Okay. Thank you.
You're welcome. Yeah, this is a really commonly unknown or misunderstood area of employment law. So then, the more common category, especially for a startup on a budget, is probably going to be non-exempt employees. There is a way to pay a salary and pay non-exempt, but you just would need to make sure you're still tracking hours, because then if they work over 40, you still have to pay them additional time. So you could pay a salary and just make sure they really only work 40 hours a week, which also is not conducive to a startup. So there's some, options there, but this is the safer way to go. So basically, if a position doesn't meet the duties test or that minimum salary test, you would need to pay them the hourly minimum wage at least, which these are the new numbers for 2022, and then track their hours to make sure that if they ever work over 40, you're paying them overtime at time and a half. And that's where those really better payroll systems come in, because those have great technology options to track time and do all that for you. So the takeaways really from this are, non-exempt employees should be paid hourly. So make sure if someone doesn't meet those two parts of the test for the exemption, that you are paying them hourly. Obviously, like I said, you should track all hours worked for non-exempt employees to ensure OT obligations are being met. Number one thing I see is a lot of employers do not track hours for employees, and you are a sitting duck if you don't do that, because it takes one employee to complain, or like I said, in this case of a client I have right now, the DOL just randomly came in And unless you can prove people didn't work overtime or didn't work more hours, all someone has to do is claim they did, and you're going to pay it no matter what. I guarantee it. It's not innocent until proven guilty. It's guilty until proven innocent when it comes to employment law. So record keeping is super important. Another thing really quick, all employees are to receive a 30-minute uninterrupted meal period break. Some of that varies from state to state, but generally that's the case. You can pay for that or not, but if you are deducting 30 minutes of time each day to show that you're being compliant and giving your employees that 30-minute meal period they need to have, then again, you want to make sure that's recorded, because that's 30 minutes each day that are deducted from their time, that are deducted from their overtime eligibility. So again, record keeping is super important there. If you pay for the breaks, not as much of a concern, right? Because you're paying for it and counting it as, hours toward their overtime. So that's a way to get around that additional record keeping nuance there. And then if you are in hospitality, tipped minimum wages and things are super tricky. So I would recommend reaching out about that. We could do a whole, presentation on that. And then just some other takeaways there. Paying employees weekly is always the best way to go from a compliance standpoint as well. So a lot of information there. Really quick, some other wage and hour items you should be aware of. When it comes to time off, that's also regulated by the Wage and Hour Division. So a lot of states now have required paid time off that you have to give to employees. In New York, that just started, at least for upstate here, this year. So in a lot of states, it's about 40 hours of paid time off you have to give depending on your size. Listed some other states here that have that already. So make sure you're aware of that. And again, the tracking of an employee earning that and using that is super important, so you can prove that you gave it to employees if you're ever challenged. There's also a lot of laws out there now for protected absences and leaves. New York or California especially has like basically a protected leave for almost every circumstance you could imagine, including like picking your kids up from school. So make sure you're aware of that. So if employees request time off for that, even if it's unpaid, you may still have to provide that. And then of course you can offer other time off to staff that isn't just sick, for sick purposes. We can get creative about how we incorporate that into all the compliance needs, but again, recommend reaching out if you're considering doing that, so we can chat through what some of the requirements are and some of maybe the best practice things are from a budget standpoint, but also compliance standpoint. All right, so that concludes the compliance portion of this. A lot of information. So any questions before we move on to the more fun stuff, which is the strategy stuff?
I know you mentioned that the DOL will come in and audit. Is it in New York? Does the equivalent agency also do random auditing, or is that only based on employee complaints?
So yeah, that's a good question. So the New York State Department of Labor, I don't see as many random audits from them as I do the federal government. That's probably because New York State does a really great job advertising employee rights. So they have their hands full with complaints. So maybe they just don't have as much time, but they could come in and randomly audit for sure. Yeah.
Thank you.
Mm-hmm. All right. So in addition to compliance, the human resource function is certainly more valuable than just keeping you out of trouble. There's, especially nowadays, I think we can all appreciate a lot of strategy that could be helpful that you can put into your efforts on the people side of your business, because in many cases, your people are a huge resource for your business from a talent and skills standpoint. And nowadays it's harder than ever to attract and retain and really engage and get the most out of those people, even compared to a couple of years ago. So let's talk about some early steps that you can take to try to optimize this function for your business as it scales. So the really key takeaway here is just to be as purposeful about your people operations side of your business as you would any other function, right? So whether it's how you market your business or a sales strategy or supply chain strategy, you're obviously not just going to wing it, right? Like you would put a lot of time and effort into researching things on those fronts, and use data to make informed decisions and, come up with a strategy. So for some reason, we don't typically do that on the people side, but a lot can be gained by doing that. So what I always try to encourage businesses to do is to try to align their people practices with their business objectives. So is what you're doing with the people, whether it's who you hire or how you hire or what you reward or punish, does that align with what you're even trying to accomplish, right? All of it should fit together. So that includes creating HR policies and practices with your mission and your vision in mind. So your people resource work for your business, and using that to inform your strategy for, again, how you identify, attract, manage, and keep the best people. And a lot of the other presentations this week in the people track covered these kind of subjects about identifying and attracting and managing and keeping employees more in depth, and some things that you can really specifically consider when you're making that strategy. So I would encourage you to go back and watch those when the videos become available to get even more information. But just to kind of break it down into a simple kind of 4-step process here, the first thing you need to do is, obviously, if you haven't done this, this could help more than just your people operations, but clearly articulate your business mission. What do you even exist for, right? What is the mission of your business, whether it's who you serve or how you serve them, right? Whether it's individual people or businesses or community, and what are you trying to accomplish for them, right? And that's a great starting point to then kind of trickle down and take these other steps to know what you need to kind of build an infrastructure around. Secondly, this is, again, often seen as a big fluff item, but clearly articulate your business values. So your values really should be the principles and rules for how you run your business, and how you will allow yourself and allow others to accomplish your mission, right? Or to take steps in their department or their job function to accomplish the mission. So obviously you wouldn't allow someone to break laws to, sell something for your business. But even more nuanced than that, what are the guidelines that you want to put in place? And those values should really be the infrastructure that you use for all the decision making moving forward. Again, who you hire, who you promote, right? Who you let go. Those values should be, or even customers that you take on, right? Those values should guide all those decisions. And the values also, from a people specific standpoint, really set the people expectations or the behavior expectations for the business. So when you're looking at employees and deciding whether they're good or bad, or should be in trouble or should be rewarded, you want to look at and see, does their behavior align with what the values are for your business? So from there, then you really need to identify and define the roles that are needed to accomplish the mission. So a lot of businesses, whether it's formally a startup or a small business, people just kind of hire their friends or people that they like into the business, open-ended from the beginning. But that very quickly can get very messy and can create a lot of issues in terms of expectations or things falling through the cracks. So I really think there's a ton of value in spending time up front identifying the roles that are needed, to accomplish the mission, and then trickling down from there. And we'll talk about that on the next slide. And then also includes, if you're a founder, what your role is, right? Especially if you are one of a couple founders or a few, what role will each of you play in the business? So as you hire staff, it's clear to them who they go to for what decisions or what questions, and who reports to who, because from experience, I've seen that get very messy, and that creates a lot of dysfunction for the business, and is not conducive to really smooth scaled growth. And then, deciding based on what your roles are, what you can and what you want to delegate. And then all of these decisions and things really inform what the infrastructure is that you will create when it comes to communicating, supporting, and reinforcing what these principles and roles are. So really quick, let's talk about how you determine what roles are needed. So I'm a big fan of the EOS model, and in the kind of series of books, they talk about kind of seats, right? They refer to positions in an organization as seats. So think about in your company, whether it's right now or even future state, right? Even out the next year, what seats are required in order for you to get things done. So my best advice here is to do this from a top-down approach. So again, what's the business mission? Okay, based on that, what kind of departments need to exist or functions need to exist? And perhaps one person is serving a few functions in the beginning, but still you're defining those. And then from there, with each function or department, what are the objectives or accountabilities of that department? So obviously, someone wearing the finance or CFO hat has certain things, objectives, accountabilities that they need to get done. So making sure that the financial statements are done, for example, or making sure the business is financially viable over time. And then from there, trickling down to once you start building out that department and hiring more supporting roles within it, each position within that department, what are they doing or what do they need to do in order to serve the mission of that department and then ultimately the business. The key word here I like is accountability. So really means ownership, right? So whether it's a department or an individual role, like we're talking about here, or a seat, what is each seat, and therefore what is each person accountable for? What are they going to own for your business, right? So you don't have to worry about it. You don't have to ask them to do all these individual tasks. They just know, hey man, you're responsible for the finances for the business, and therefore you're responsible for all the things that need to get done in order to make sure that that is healthy. So that's a lot more important to define than individual tasks that someone needs to do, right? And then a key thing here is to keep business needs and functionality at the forefront, especially in the beginning. So again, if you have people that work for you now and you're thinking about how you might reorg, I really caution you from creating positions around individual people and instead do it around what's most efficient and effective for the business. I've seen businesses do this, and then that's just not scalable or sustainable over time because it's inefficient, or that person leaves and now it's impossible to hire someone that can do those 5 random things for the future. It just isn't setting up a really efficient structure for moving forward. So once the business grows, certainly people can grow and learn beyond their initial role, and you can form some of the accountabilities around the individual person, but really keep the business need at the forefront. And then again, if you're a solopreneur, if you're a partnership situation, it's just as important to define what your accountabilities are going to be as it is the people that work for you. I've seen a lot of clients where the partners aren't clear about that, and literally years and years and years into the business running, there's a lot of dysfunction and fighting and conflict, and then really issues with staff reporting into the founders on who's really doing what. What's important for you guys to define that upfront as well. So as you do that, this is just an example of like an org chart diagram that you could model to, kind of visually map this out. And then this is kind of just a list of what, as you're breaking out roles, how you may choose to list what accountabilities are. And just, this is a good example of what accountabilities versus job tasks are. So for example, the staff accountant role, you can see, it's not listing individual tasks. For example, it lists that, billing, which is accounts payable and accounts receivable processing, is a part of this person's accountability. So it's not listing that they, cut checks or, pay vendors. It's under all of that accountability. All right, so once you define the roles and the seats, something you should do from the beginning also, before you hire anyone, is purposely and strategically think about who needs to fill these seats. And that's considering one, what knowledge, skills, and abilities or experience does the person need to have. So before you even go out there and talk to anybody about the roles, defining who you need from a skill standpoint. And then also obviously an attitude or attribute standpoint. And to me, this is more important, right? Because especially if you're a small team. If you hire someone that's not going to get along with you or share your vision or your values, that's going to be a lot harder to fix than, teaching someone a skill they maybe didn't have coming in. And it's going to be a lot more disruptive. So again, a huge area I see businesses, whether they're a startup or established, they don't put the time in up front to really define these things. So then when they do a job posting, these requirements are not advertised in that posting to try to attract the people that they're looking for. And then they also don't have these defined up front to then ask the right questions to determine whether the person they're interviewing is a good fit from either of these standpoints. So obviously in that situation, you're more likely to make a hiring mistake. So ask yourself these questions about each role, create a profile for each role, and then use that to create that job posting to attract the person, to create your interview questions, and then make a decision about hiring the person. And something that came up in a lot of the other presentations this week, especially on recruiting and selection, was the idea of kind of thinking outside of the box right now compared to the past on this subject. So just think about really what it is you need and not necessarily what typically would be something you would look for in a position, right? So you may want to consider what's trainable. Again, if they don't have specific experience with a system you're using or something like that, it's possible if they have had to kind of learn skills on the job before, that's something you could train them in. So consider kind of thinking outside the box and hiring more for attitude fit. And fit from like an intangible skill standpoint, because that's probably going to be a lot easier to teach the tangible skills than it is that. Right. So the final takeaway here on the strategy is, taking these steps up front to define really it is what you need, what's functional for your business, who you even are, to then inform, again, the other decisions you make later about the people, kind of infrastructure and operations part of your business. So you'll use this mission information, these values, and these role needs as a map for how you decide to attract, select, and manage, and really treat your people at the end of the day. And then, there's not enough time in this presentation, but all of that is used then, as we talked about, to form a hiring strategy, whether it's your job ads, your interview questions, policies on managing staff, even policies in your handbook, which should all be custom fit to your business, right? And what you want it to be and what you want to get done. It should not be a template. How you reward employees, how do you reinforce good performance? How do you even manage performance? How do you promote people and make those decisions? And then how do you, make decisions about disciplining people, and what does that look like? And then a quick note here, all of this is high stakes regardless of the role in your organization, but there's a special emphasis on leadership roles, because those people that you select and bring in and the expectations you set with them have much greater implications for your business, especially as it grows, because the experience any staff has with those people directly impacts their experience, or kind of informs their experience about the company and whether they want to work for you. So definitely you should be doing this with an even greater sense of importance when you're hiring leaders for your organization. And that's talked about in a lot of the other presentations from this week as well. So a quick note, so my business helps other businesses and its clients make a lot of these decisions and work through a lot of this people operations, decision-making and creation. So quick note, on my website, there's a ton of free kind of like blog posts and articles and resources that I would encourage you to review on a lot of what we already talked about today. So I would subscribe to my newsletter and follow me on social for just a lot of free information resources. And then I would encourage you to find other, allies for your business, right? And when you're considering, benefits brokers, CPAs, payroll providers, outsourced, CFO services, or any business coaches, make sure that they're really going to be an ally for your business and they're going to actually to provide value to you and be helpful. There are so many options out there, and in many cases, they're just looking to make money off of you. They're not going to be proactive about helping you. They're not going to kind of take a stance of letting you know what you don't know but need to know. And that's really not helpful, and that's not providing value in my opinion. So especially if you're local, I know a lot of awesome providers in this space if you're looking for suggestions, but this is something I think be really cautious about this and have really high expectations of these, vendors that you're going to pay to do something for you, and make sure you understand what they really should be doing for you. And that is it. So thank you for listening, and we have a few minutes left, so I'm happy to answer any questions that you have. I know it was a lot of information, but there will be a video recording provided on this later as well. Any other questions at all?
It was great.
Thanks. Oh, I see something in the chat here. Oh. All right, well, thanks so much. Like I said, this will be recorded so you can refer back to it later. Otherwise, thanks for joining, and have a great rest of your Friday. Thanks, Johan, for coming.
Talk to you soon.
All right, bye-bye.
Bye.